Good Wednesday morning, I think it is, right? The 22nd of December. Thank you for joining us. Thank you for joining me. We should have a lot to talk about today because there's a lot of green on the screen. It's going to be a good day if you're a producer to kind of keep it on in the background at least, because it's going to give you that holiday feeling, good Christmas cheer. Let's take a look at how things have shaped up overnight. Let's take a look at that corn market. We were up 3 cents in that March contract to 601 and a quarter. We were as high as 603. I don't know if you remember, but we went home last night talking about three big numbers, 6, 13, and 8, and they all came true, right? So little dumplings dancing in our heads. We got what we wished for. Maize up 3 1/4 cents at 602 and a half. Let's see how we did overnight in the soybeans. Soybeans really kind of tacked on some real estate here. After yesterday's gains, Jan was up 10 1/4 cents at 13.18 and a quarter, while March up 10 3/4 at 13.23 and a half. Okay, Chicago wheat, and what are we doing over there? Chicago wheat was higher as well. March is up 5 1/4 cents at 804 and a quarter, a high of 806 3/4, so 2.5 cents off the highs there. How about hard red wheat in Kansas City? Let's take a quick look at what Kansas City did for us. Not as much, but still in the green. March up 1 3/4 cents at 843 and a quarter. May up the same, 1 3/4 cents higher at 841 3/4. How about spring wheat? What's that look like in Minneapolis? Decent gains, 5 cents higher, nickel higher, 10.30 and a half. May's up 4 3/4 at 10.20 3/4. All right, so not bad. Finally, let's take a look at cotton. This one's been fun all over the place. We're up 55 cents at 107.82. Let's bring in Brian Hoops from Midwest Market Solutions. He's going to sort it all out for us. We call him the guru, or maybe even Merlin. Brian, what do you think about these grain prices? It's good to see. Remember, we went home last night talking about 8, 6, and 13, and boy, oh boy, they came true.
Yeah, it sure did, Scott. Yeah, we're putting in some more weather premium in these grain markets, corn, soybeans, and to an extent the winter wheat contracts, all putting in some premium. And so we're continuing to add into those markets. There's really no change in the forecast. It still remains very warm and very dry in southern Brazil and Argentina. This is for the next 10 days. I think that is going to continue to be well supportive of this market. Plus, we're seeing all kinds of technical buying interest come to this market here, as there's a lot of specs coming in. As we break above key resistance points, key moving averages, there's more buying interest coming into the marketplace.
Yeah, I noticed, as we pierced that $6 and $13 levels, we've tacked on some decent real estate, and you're right. Once we got through there, that was what I was thinking about. If we got up there, sometimes we just go kiss those levels, if you know what I mean. And then we run into some resistance because there are some technical guys that like to sell those levels. But then if you get caught short selling them when we just think you're going to go up there to touch them, and they actually do make it through, there is now another impetus for a move higher, as those shorts that sold that initial level have to come in and cover their positions. So you get another move higher, and that adds to the rally, and it's good to see. So with those levels now, are you expecting to see? I know we're not talking new crop yet, but are you going to expect to see more new crop sales, or at least start to think about it a little bit more?
Yeah, I think as far as the new crop goes, there's really not much interest in selling at these price levels. We talked, I think yesterday, about if you have a $6 December corn, or you can lock in that type of cash price. That's very attractive, because you can maybe 200 bushel corn, you're looking at $1,200 gross. That'll cover your expenses, maybe a little bit of profit. But if you're looking at $5 cash, you're looking at $1,000 gross. That's really not enough to even break even for a lot of producers. So I don't think at this point in time there's going to be a lot of interest in selling new crop. There's some interest in selling old crop and re-owning it, because the market is giving that incentive to producers, and that's what it's trying to do, is pry that grain out of storage away from the farmer, as they either have it at home stored or stored in an elevator commercially. The market wants to pry that grain loose, and it's giving an incentive by tight basis levels, inverted market structure. That sort of thing is a way to try and get some grain flowing and keep those pipelines moving.
Yep, get it out of their hands. Okay, great. That's good stuff. We're going to go away, pay some bills. We're going to come back and talk livestock with Brian Hoops after these messages. Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. I wear the black and white every day, even on the weekends. I know, kind of weird, but I like it, and that's a great segue to move in and talk about what we did in the live cattle market yesterday. Let's see how we did. Yesterday was an okay day. It was quiet, but we just quietly drifted higher. Look at Feb. Live cattle was up 95 cents at 136.92. April was up $1.17 at 141.35. We'll see how we open up here this morning. What did feeders do yesterday? We'll see. They were also a little bit better. Jan was up $1.62, 160 spot 85. March was up $1.32 at 161.82. And then lastly, let's take a look at those lean hogs. How did they do? They were higher as well. Like that Feb contract, almost $3 higher, 295 higher, 82 spot 42 last. April was up $2.07 at 85.57. Let's bring back in Brian Hoops from Midwest Market Solutions. Brian, any idea about where we might open up these livestock markets here this morning?
Well, yeah, I think we're going to see a little bit of strength here in the cattle and the hogs. Once again, we saw yesterday some short covering. I think we'll probably see a little bit more. Cold storage report out this afternoon. Tomorrow afternoon is livestock reports as far as quarterly hog and pig report coming out at 2 o'clock, the monthly cattle and feed report at 2 o'clock as well. And markets won't have a chance to react to it until Monday because markets are going to be closed Thursday night, all day Friday, because of the Christmas holiday. So, a lot of position squaring I think will take place today and tomorrow in these hog and cattle markets.
Yeah, it's interesting. It's not too often where we have such a long lag after we get, say, some sort of report and before the market can get, react to it. It reminds me of the old days. I don't know if you've been down there, but like in the early 80s when I kind of started in my career, they used to actually, when the USDA would release their numbers, it was after the close, and you had to wait all night until the next morning before we'd open up, before you could react to them. And it was almost like this town crier situation where some guy would walk out into the middle of the trading floor after everything had been closed and unroll his scroll and then give us what the USDA had. And there was this hushed market and everybody was whispering what they thought the opening call was going to be the next day. It was pretty stressful because we had to worry about what the market was going to open up. But we had about, 18 hours to wait before we could actually react. So it was pretty interesting. I guess we're going to have to do that again with these livestock reports. So I really appreciate you bringing that to our attention. We're going to have to keep track of that tomorrow. But that's Brian Hoops from Midwest Market Solutions. Have a Merry Christmas. Thanks for being on. The content's great. Really appreciate it. We're going to bring this one back to Nashville so I can throw this one over to Janet.